Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Omkar Godbole. He is the market reporter at CoinDesk to discuss top trends in crypto today and his outlook for 2022. Omkar, it's great to have you with us. Welcome to Trade Talks.
Thanks for having me, Jill.
All right, let's kick it off and talk about some trends that you saw in 2021. How is Bitcoin evolving as a macro asset?
Yeah, so the year 2021 hasn't really turned out to be as bullish as 2013 or 2017, but the key takeaway is that Bitcoin has really evolved as a macro asset, maybe as a risk-on currency, just like an Australian dollar and Japanese yen pair. Like, it takes cues from the US data, inflation data, or monetary policy. And I know a couple of forex traders who keep an eye on Bitcoin's trends over the weekend, so because it gives them an idea of how the market is going to be over the coming week. And it's not just a market that is guided by mining reward halving. So prior to 2021, it was all about this once in a 4-year event where supply reduction would happen and everybody would bet on a rally. But now it is much more deep. It takes cues from macro data, Fed policy, etc.
What has the impact of the options market been on spot Bitcoin and other spot crypto, as well as decentralized finance?
The options market's volume relative to the spot market has grown substantially over the past 18 months or so, and just to begin with, it points to market maturity. And as far as impact is concerned, we do see some amount of volatility around the monthly settlements. So, as in traditional markets, we hear about this max pain theory, how institutions manipulate price to a certain level ahead of expiry, but we are not seeing there is no evidence that institutions are involved in any such kind of strategy in the crypto options market. But if you look at the data from January 2000 till date, in every just in the lead up to the options monthly settlement, Bitcoin tends to gravitate, move towards the max pain point, and once the settlement is done, it begins the primary trend. So there is evidence of options influencing the spot price some way. As far as DeFi is concerned, the option market is still quite small on the DeFi rails, but it could get bigger. The primary reason being, DeFi has simplified options for the retail crowd. When we talk about future and options, it's a market dominated by sophisticated traders, because there are a lot of variables to consider when you trade options, like strike price and implied volatility and managing risks. But with DeFi option vaults, like offered by StakeDAO or Ribbon Finance, investors just need to deposit their coins into the vault, and the rest is being done by the vault itself. So it's kind of simplified the options product, opening doors for retail participation.
Are you starting to see altcoins decouple from Bitcoin?
It may be too early to say they have completely decoupled, but there is some evidence, and as I said, it's largely thanks to Bitcoin's evolution as a macro asset. So now Bitcoin is much more sensitive to what Fed does or what other central banks do, and how global markets are trading. So during the recent crash on the Thanksgiving Day, it was Bitcoin that took a bigger hit as compared to Ether and other layer 1 coins. So we can say that the process has begun, but it will take time. But I'm pretty sure it will decouple, because as again, going back to the same point, it's no longer the market just guided by reward halving. There are a lot of things happening on the development side. There are consistent flows which tells us that investors and venture capital funds and institutions are looking beyond Bitcoin, and they see promise in other coins as well. So eventually, obviously, I do expect all coins decoupling from Bitcoin.
And Omkar, how are meme tokens starting to evolve?
For me, they have evolved as I would say, a contrary indicator, much like auction rates in traditional markets. So when you see art auction rates climb, it's usually a sign of excess speculation, too much money into the economy, and too much greed. So it's just the same way with meme coins. In May, we saw Dogecoin go parabolic and then market crashed. And just before the current pullback, we saw Shiba Inu rally, stage it was a steep rally, and then broader market came down. So I think going into 2022, traders should keep an eye on how meme coins are doing. If they are surging, it's a time of being a little cautious and taking risk off the table.
And finally, let's get your 2022 outlook here. You think that crypto might be in for some slowdown in the first few months. Walk us through your outlook for next year.
As of now, I think going into the next year, it's all about macro. It's all about what central banks are going to do, because at the end of the day, liquidity is the king, and you cannot, as they say in traditional markets, don't fight the Fed. So if it has signaled 3 rate hikes, it's going to keep the gains under check. Now, the latest bond markets, pricing tells us that they are not sure Fed will actually deliver on 3 rate hikes. So if they backtrack, obviously we'll get renewed bullish momentum in the market. Also, there are a couple of catalysts like ETH 2.0, and that could also bring some buying pressure to crypto markets.
All right, Omkar, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.